So good afternoon, everyone. I think today is the day when we are focusing all along on the payments. And one of the biggest revenue generator for any bank would be a cross-border payments. It's a $22 trillion opportunity for the globe in terms of transaction value. It's $100 billion plus revenue opportunity for banks to generate revenue on. But are customers really feeling happy about doing a cross-border payment? The fundamental triggers for any customer when he makes a cross-border payment is my payment reaching me on time? How much cost I'm paying for the transaction? Am I making sure all the regulations for every country my transitional pass-through will get complied? So these are a few basic questions any customer has in mind when looks at any cross-border payment. And our today's discussion is focusing on some of these aspects to understand the cross-border payment, and which used to take a number of days to reach from one country to another, and now we see it happening in less than a minute or so as well. How it's evolving, what are the learnings for each of us from them, what are the competition doing in the market, what kind of value add fintechs are doing in that, and so on and so forth. So with me, as we just discussed, we have Amit, who is Deputy CIO for Digital Banking in SBI, Mr. Biswa, who is the CIO for IndusInd Bank, Mr. Bhavesh, CIO for SBI Mutual Fund, and Mr. Samir, who is founder for Digital Fifth. Right? So I'll start with one of the most important questions, and I'll start with Amit for first to answer. So we see a significant amount of change in cross-border payments in last couple of years. What is really driving the change? Amit, your views on this?
So remittance is increasing on a year-on-year basis, and what we have seen, as you rightly said, Sunil, what needs to change when people, the aspiration of people nowadays is instant gratification, right? People like 2 minutes noodle, and they want everything to be provided as they wish. But what we have seen that there are multiple challenges when it comes for a cross-border transaction to be done in an online way. State Bank of India have done, along with Mr. Prime Minister last year, cross-border transaction from Singapore in a real-time basis. But what happens, primarily happens in a cross-border transaction, that there's a AML which needs to be, which is an anti-money laundering system, which is specific to a country. So every cross-border remittance which have to start from that country, it has to go through that AML. And usually there's a time lag onto that. That's why that money would be withheld within the country. Once it clears that AML, then it reaches the country. Our country would also have our AML system, and then only it can be remitted to the account. So it's more of a process part of it, which we have to look how we can work onto it, how the different countries can collaborate. The biggest remittance which comes to our country is from Southeast itself, wherein UAE and Dubai and all that. And it's quite a huge sum. So asking me that question, that whether it can be done in a real time, yes, it can be done. We have shown it, how it can be done in a real time basis. But then a lot of countries have to collaborate at the same time. Currently, if you want to do a remittance, you have to walk into a branch and then give a cash over there, wherein we are working with fintechs in multiple countries so that this kind of a thing can be done through an app itself, which we tried in Singapore with the fintech. We are working in some of the other countries, the Western countries, where we are ready to provide that kind of a solution. But I believe it's an exciting journey. It would take some time to stabilize itself, but it can be done.
Sure. Biswa, your views?
Yeah, as we heard, I think remittances globally, it's a fairly established business. It's about, I think, 230 odd billion USD as of 2018. Now, if you look at the composition of the business per se, largest share is on the business to business, which counts for the highest in terms of value, volume, and lowest in margins. So what is really happening is that I think globally there's a shift away from trade-based. So trade-based cross-border will continue because that depends entirely on how the global economy is growing, at whatever percentage it is growing. But there's a very robust demand for consumer to business, business to consumer, and consumer to consumer remittances as well, right? So that is where things are changing. So I think the biggest example that I can quote is, if you look at the Asia markets and if you look at the Gulf markets, which of course Gulf is the largest market for remittances. But if you look at the Asia market, if you take China as an example, what is really happening is the largest population of migrant workforce, and being able to have disposable income to be able to remit funds is highest in this kind of, in China. So there, the kind of use cases that are starting to appear is how they are using remittances for fees pertaining to tuition, schools, colleges, etc. for immigrants, for their children, for their families, as well as for bill payments. So these kind of, I guess, trends are slowly moving the remittances market, shifting them, I would say, outwards from what is traditional. I would also say that if you look at the kind of e-commerce as a market by itself, I think the recent report I read that about 20% of e-commerce is already global. So thanks to Amazon, eBay, and so on and so forth, now these kind of companies are already transacting, or customers are transacting globally on these platforms. So what I'm trying to say here is that the shift is happening in terms of the overall market in the remittances in the cross-border space, depending on the business models. The customer is definitely driving a lot of this in terms of their demand for more convenience, demand for speed, demand for quick settlement, low error rates, and of course, transparency. So those are some of the, I would say, challenges, or as not the challenges, the way the market is changing. Challenges-wise, I think we've already heard. Challenges are there are many challenges, and we are all in the banking space and in the fintech space working collaboratively to solve for these use cases. So, for example, I represent IndusInd Bank. So we have done a cross-border inward remittance platform tie-up with Ripple, which is a blockchain platform. A couple of large banks are already tied up with us, and they're putting in transactions daily through this platform. I'll talk a little bit as we go along, but it clearly has a lot of benefits on the blockchain side. So we are trying to see what other use cases can be added onto that and how it can make our customer experience a lot better.
Sure. What I hear from Amit and Vishwa is there's a lot of change happening, a lot of push from government and support coming in to make sure on the cross-border payments, we are making it far more transparent, far more faster. A lot of investment has also been done by banks as well. So I come to Samir. Samir, from your point of view, right? I mean, the amount of innovation, what you've seen in India, more from domestic payment or customer to customer, P2P or B2C, how you see a difference in a cross-border payment from the same point of view, from the startup ecosystem perspective?
I think if you look at it, the amount of disruption or change which we have seen in domestic ecosystem, where I think we have all been using a lot of products like IMPS, UPI, and other things, and wallets as well. So I think the life has changed on that side. You know how transparent it has become and how low cost it has become. Even the local payment system which used to charge us, they used to charge us some money, even NEFT RTGS has come down to zero. But if you look at the remittance, which is, or maybe if you look at wealth, there is improvement where there are direct funds there, where you're lending, digital lending has happened, and a lot of work has happened. But no major disruption has happened on the remittance side. The reason is very simple. One is when it is cross-border, you need a lot of investment to be done by someone on corridors, right? So not enough money is there with the, let's say, any of these large fintechs also to sort of pump into segments. For example, somebody wants to sort of solve only one segment, let's say maybe Europe to India and maybe pick up 3 countries. He needs funds to be invested on both sides to do something what, let's say, Instagram or TransferWise are doing. So if you look at the real impact, this is my personal belief, is almost zero right now. And there's a reason for it. I think, and I'm maybe taking an anti-bank stand here, that basically, why do you do innovation? You do innovation when there is a customer demand is so strong and somebody else is competing and which is taking care of it. So in payment side, obviously you've seen so much of Paytm and others creating challenge, and everybody sort of took it up. And also there is an NPCI which is centrally governing it. But remittance side, not really. We are still using the old corridors or old platforms of Swift and everything else, which has been slow. So the intent has not been there. I am a small-time exporter of my services. Now, whichever country it comes from, I don't know what money I'll get, why will it get rejected, how many times I have to follow up with my banks, and I don't know what amount will also arrive. So I sometimes have to figure out what amount has arrived, why out of, let's say, maybe $5,000, why 50 or 80 or $90 were cut on the way. I don't know, okay? So the game is that in India, let's say, for example, the banks earn almost maybe around anywhere between 15 to 20,000 crores only on remittance business. Maybe I'm exaggerating, maybe 10,000 crores, right? It's a huge money, which is less risky business to be in because that's a top line directly. There's hardly any cost because the infrastructure is already laid. And whatever process is done at a central level, we don't need to do it at a branch level, everything. I'm talking about inward remittance. I'm not talking about outward right now. So not much as work has happened. Intentionally also it is possible because if you start to disrupt, this 10,000 crores or 20,000 crores will come down to maybe 1,000 crores. And who wants to reduce the top line, right? So I think we have yet to see disruption here. While I think it can move faster than the aircraft for sure, it has to be less than maybe 10 minutes, 20 minutes. We want to do an AML solution as well. And maybe it will only get done when people like NPCI will kick in. So for example, all that central remittance are handled centrally where you can handle all the AML checks which you want to do. Then the banks have to do nothing but credit wherever they want to. I think that's and they can also do a tie-up globally rather than each bank saying that I have tied up with this bank in that country. That doesn't work anymore. So maybe it's still some time away. Let's see in next 2-3 years somebody comes and disrupt this.
And I think we are seeing that change, right? I mean, we just heard, and one of the leading entity in the entire transaction banking could finish a transaction from Australia to China in less than 13 seconds. We are also seeing trends where most of the cross-border payments are getting settled within 24 hours. So that's a change we are seeing to happening where earlier days it used to take 7 days, 8 days, 10 days. Probably you will reach to Dubai much more faster than your payments would be. So that trend is changing and we are seeing the change happening over. So from there, I'll come to Bhavesh. Bhavesh, from your industry knowledge, right? What are the key challenges you have seen or you as a customer would like to get addressed over a period of time which a customer faces for cross-border payments? We covered a few of your view as well.
Sure, thanks Sunit. So primarily, one is the cost, right? So most of the panelists alluded to a fixed cost as well as a transaction cost. So that is something which has been traditionally working. We talk about services like SWIFT, and they have launched the GPI, the Global Payments Initiative. There are services like PayPal, which are mostly B2C. But from a B2B perspective, it is the banks, the cost that, and the multiple hops and the assurance that you need that the money will be safe. So two challenges, or rather areas which I feel are most important for any business or an individual sending money across the border is one, is the cost, and second, obviously, is the security of it. So these are the primary two areas, in my opinion.
Sure. So let me just flip this question to Bishwa and Amit. One of them can answer. If these are the challenges raised by a customer, when customer comes to you, how you think you can respond? How you think your banks are responding in this area, which is cost and speed? Amit, Bishwa, anyone?
So cost invariably, if you remember the earlier days when people tried to send money either from US to India or India to US, when the old days, then they were being charged, some of the charges were exorbitant, right? So people were charging something till the time banks chip in, and then State Bank of India at that time have a tie-up with the Western Union, right? And then the transparency comes in, the charges start getting lower. Now we are moving to a world wherein we have to see, wherein people want to compare the cost. So sending money through a particular channel would be much more beneficial to them, or what's the current rate? Now people have started following the Forex rates also. What's the rate, what time they want to do. But most of the time it's not a very big concern for them. The biggest concern for them is whether my money would be delivered when I want it to be delivered, right? So it's a last mile delivery timeline what we have to see. And for that, as I said earlier, we have to look at the security part of it. And the security is not only concerned about, so 99% of the transactions are genuine transactions, but what we have to see is one of the panelists touched upon the blockchain part of it. So SBI have formed a bank chain along with multiple banks, and we talked about a trade finance, right? So export is a very good example for doing on a on a blockchain itself, where there is a shared ledger which is visible to everybody, and then they keep on uploading the document, and if it is approved, so you come to know how blockchain can be used. For remittance, it can be used itself, but as I said, there's a lot of collaboration is needed for that. But blockchain have got a very long way to go. We have been talking about in banking circles for almost 2 to 3 years now about a blockchain, but we have not seen a blockchain real-time implementation. State Bank of India is going to develop a blockchain solution for something what we call as a, a product wherein so for example, Maruti is our customer, they have got multiple dealers, and based on the VIN number, whenever they are going to take a finance, their money, so they do financing to their dealers itself, and as in when they sold their vehicles, the money should be remitted back to the Maruti itself, which is being delayed currently. So that's one of the example on which we are working upon. It should get launched prior to Deepavali, but that is for the corporate customer. For the retail side, trying to bring in some kind of a solution which is based on a blockchain where we intend to do, but I believe there's a collaboration which is needed wherein State Bank of India was always ready to fund that collaboration itself, but I believe we still need to talk to a lot of banks to move forward onto that.
Thanks, Amit.
Sunit, a point to that.
Sure.
It's not just banks who are looking at blockchain, right? We have companies like IBM who maybe 4 or 5 years back, to manage their supplier payments, set up a blockchain, and now they are commercially available solutions around it. Same with Samsung. So it started off because I was privy to one of those projects when we both were at HSBC. So one of the projects was to manage their suppliers across borders, and now that solution is available even to retail customers on their mobile phones, right? So that's where even non-banking companies are trying to get into it, because like you rightly alluded earlier, the revenues and the profit margins are so high that it's a point of interest for most of these companies.
Sure. So let me just flip this question, right? And we talked about blockchain, and at the same time, we talk about how important the compliance is for a transaction to happen when it's cross-border. So, Samir, question to you. I mean, how you see the entire artificial intelligence, machine learning, blockchain as a space can help to improve on the financial crime compliance, which is another significant aspect of the entire cross-border remittance transaction. Any views from that perspective?
I'll put it maybe more, I keep going back to maybe a centralized entity to do it. What will happen is that if you speed in the process, and I'm right now not focusing on only inward, maybe it helps in just focusing. So if the inward money comes, it can go to any bank, right? We really can't have a single bank solving that problem. It will be to any bank, right? Now the challenge is that there will be an AML issue at some destination point for sure. If it goes to X bank will do a good validation and ensure that that money is caught. But Y bank may not be able to do. Maybe now in the country has hundreds of banks. Each bank may not have the right technology to solve. So the AML portion obviously will solve most of our problems. And that can only be solved at a central level. Otherwise, you will have frauds or you will have issues at the bank level. So if we were to sort of focus just on single implementation of the corridor coming in. For example, the money is coming in and you have a central authority which reads the transaction. That does not need to look at a separate database. I mean, I'm just being very, very categorical here. You don't need to look at each bank may have their own repository. Their repository also comes from the worldwide data only. They also go to RBI to figure out where the money should not go. They also check the same words which anybody else would. So the best way to solve these kind of problems is to go sort of and go centrally. So each of the individual banks don't have to create solutions for it, saying that if I were to get an inward remittance on real-time basis, I have to invest $500,000 into this piece. They can't. They just can't do it, right? So I think what we need is to sort of, that kind of investment has to be done at the central level. We have seen what NPCI could do. Imagine if UPI was to be done between two banks on their own. I think we are at least 2 light years away from that. It just can't happen, right? It's just a joke that 4 banks will keep creating corridors and saying 4 of us are integrated. I think the only guy who can integrate us in the country is the government. And I would believe that that kind of entity is only able to solve it. So if you need this, that is the way the technology will be laid. And obviously when you put AIML layer on top of that, my personal view is that it will solve almost all our sort of AIML issues. I obviously have an extension of thought that when we talk about this whole AIML, I think it can be used on all the other databases as well. Today, NPCI has almost all kind of transaction of data. So they have now check processing data, they have now UPI data, they have IMPS data. They can actually help in a lot of fraud management as well as the country. So they have the data in the country. And maybe one more data point from there might just help.
So
Sure.
I've
Yeah,
got
Amit.
one point to add over here is that NPCI per se can do everything, but there's a limitation to how NPCI has been structured because there's a framework-related issues with respect to it. When it comes for remittance itself, you need a sponsor bank. You have to have a vostro nostro, which is per se. I do not want to, but what happens is that those are being much more covered with the banking license terms itself than of a payments term. So there is a framework issue. I believe we have to find out a way if it needs to be done centrally. But usually most of the bank have got a tie-up with different sponsor bank across different countries. And so there are things which needs to be looked after.
Sure.
No, I think I do understand infrastructure issues, but I think government is there. They want to create it. They will create it right away, and you and me can't do anything about it, right? So I think those are structural issues we have to solve. We can't say that National Payment Corporation will solve only Indian payments issues. I mean, why? Why not my lending issues, right? Why not my other issues? So I think, maybe it's a separate entity which will be created, but banks per se will not solve this problem because they can't.
And we like this bank and fintech diversity, which helps.
No. So I think the point is a very, very interesting, polarization of opinion that is beginning to form, and I like this because on the panels, typically people speak the same voice. So I think Samit, thanks to his point of view, is contrary, but it is a valuable point of view. I would only say that banks have entered into consortiums. They have entered into partnerships, members of various kinds of blockchains. And I agree to a certain extent that, of course, all of these blockchains are not interoperable. That is actually the problem. But if you see the fundamental of the blockchain technology, at least from a cross-border point of view, these kind of issues like transparency, where is my payment, what is the status of my payment, what is the charge that they recovered for my payment, when will I get it settled, can I get it done in a matter of minutes, are actually the key tenets of the blockchain technology. I mean, to take an example, when we launched blockchain, it was not to necessarily integrate with a worldwide set of banks. Of course, Ripple, by virtue of the fact that it was the provider of the blockchain network, helped us connect to banks globally. That I do agree, right? Now, the advantage that we've done is we've built on top of that platform. This is the difference, actually. So we have got the key point to note here is when you pass a cross-border and you're in a different time zone from India, and let's accept for the moment that India is one of the big destination countries, the first and foremost thing which bothers them is liquidity management, right? And that's a risk for them because there are costs of capital pertaining to liquidity. So what we are trying to solve for the banks which are remitting for us and therefore their customers is to give them visibility into their liquidity position, no matter what time of the day or night it is. Again, it is built on the back of the blockchain distributed ledger protocol. So that's something which I think is a great experience and transparency enabler, which we've seen actually. The second is, now coming to Samit's point, that we've actually seen customers choosing types of payments when they are cross-border. I mean, I might want to do an RTGS, I might want to do an IMPS. That choice also we are giving to customers. So today, it is possible for us to settle transactions in a matter of 2 or 3 minutes, which was earlier not possible, right? And these benefits have been passed to the customer. So I think that, yes, there are ways and means to achieve the outcome. obviously a central repository for fraud and anti-money laundering would help. But then all of our AML checks and fraud checks are largely driven by syndicated data, right? And most of the banks already follow those kind of real time. Like for example, our blockchain, it's a real time integrated with the AML. So I decide on the fly, either I pass it or I don't pass it. So of course it goes into an exception queue handling when there is a possible match. But otherwise, it's all integrated straight through. So I have been able to deliver this experience. Why not other banks? Sure. Right? And every bank is trying to do that, right? So I think the main issue is interoperability between the blockchains. If that can be resolved, I think a lot of these problems might go away. But I would say also one more thing here, that centralizing a central repository, a directory, or whatever way we want to call it, has its own concerns. And privacy is number one in that, right? Because we have seen how Aadhaar has kind of evolved in the India landscape, right? It is an extremely good enabler for all sorts of technology innovations. Banks have used it, NBFCs have used it, fintechs have used it. But it comes with its own restrictions. It has come with more controls over the last few months or years, right? And the same thing we are having very recently, there was a circular from RBI on the use of CIBIL scores, from a fintech point of view. All of us know what it is all about, right? So having a central repository does not always imply that it is free from problems of privacy. So let's understand the fact that ultimately it is the customer's data and his right to the data being used in a judicious manner by the bank. So a central repository can help, but it has to be also governed then by another body which needs to make sure that that body is also properly regulated.
Sure.
So we must understand that point which Amit mentioned, that banks there is a framework, and the framework is for a reason, and therefore, if the banks can collaborate better, given the use cases that each of the banks have done, I think there is a great potential to make this into a transformative kind of a journey. Sorry, long-winded answer, but I had to bridge Sameer's point of view, and I try to bring in.
I think that's why sitting in between both of them, just to mediate out. Yeah, Bhavesh.
Sunit, talking about diversity and the fight between fintech and bank, we are forgetting two major other channels, right? The Hawala network probably has more revenues than maybe the fintechs at this point. It's in some trillions. I don't even know the number. And then the cryptocurrency getting moved between countries on the darknet. So even these two are going to, Hawala is there for ages. That's how banking started probably a few hundred years back. But these are the areas which we probably should also consider.
So I think what I'm getting is a view from all the panelists is, yes, this new technology will help us significantly to improve the speed of a transaction, transparency of a transaction, and also it needs a lot of support from a central bodies which can help us to get the data together. But also we should be making sure the customer privacy and customers' data is also being managed well. If we get this right, hopefully we have better days on the entire remittance as a whole program. So let me ask another question, right? And I think we touched upon that, where transactions are becoming much more cheaper. Now, when transactions which are cross-border starts becoming cheaper, it hurts the profitability of the banks. And obviously, even as we speak today, 95% of transactions which are cross-border are routed through banks as a network. So then the question to the fellow panelists are, as you see the revenue per transactions going down, how you think as a bank can compensate and add more revenue to your side to compensate and have this revenue drawn down? It's been managed by revenue going up. That's the question. So Amit, Biswa, anyone of you want to answer?
So obviously, if you have seen, the payments have undergone a full 360-degree change in last 2 years. So obviously the charges have almost gone away, right? Yeah. So it's for domestic payments, for remittance itself. So how it can be only tackled is, we only believe in to increase the volume itself, right? So increase the number of volume, which should compensate on the per transaction, money what a bank is going to get. And over and above it, if you can bring in an efficiency over there and try doing it in a lesser amount of time, that would help the banks itself. But banks generally have seen, and what we have seen, how much we are doing 800 million transactions per month on a UPI as of now. State Bank of India is a contributor of 60% of those transactions, right? So that is there, and up till 2,000 rupees, there are no charges itself, right? So for UPI is almost like free of cost, available to everybody in the country itself. But just to ensure that this digital transaction a habit of doing a digital transaction is being inculcated within the country, we are ready to go ahead with that. We are ready to go ahead with the remittance also, but at the same time, we will try to bring in some synergies, building between, especially with the fintechs itself, right? Because sometimes what happen when our size like State Bank of India, if we start doing lot of innovation ourselves, it would take a lot of time. So we have got a full collaboration program with the fintechs itself, which we call a startup program, wherein we fund in startups, we help them to work on their innovative ideas, and which if they are in a banking domain, then we'll take them on board itself. So there are almost 17 fintechs which are engaged with State Bank of India as of now. So all our chatbots, etc., and there are some of the platforms which we have also taken. But I believe going forward, the collaboration is the keyword, and State Bank is very open to do that collaboration with fintechs.
No, I agree, and I think we all have seen how SBI is getting transformed in terms of digital age and technology they use it over. So let me flip the question. Samir, do you see, and again, we stick to cross-border payments as a space, do you see fintech and banks competing with each other or are complementing each other?
So I think they obviously have to collaborate. Competing will happen only when some of the fintechs become very large on the ecosystem in this side, which has not happened at all. I think TransferWise or Instagram, the largest of the guys, are hardly controlling too much as of now in this process. And they also partnered because they can't really do a transaction worldwide without the normal route. So, I mean, how the innovation has happened worldwide on the remittance side is, today, if somebody sends me, let's say, $5,000 in the banking world, interestingly, I can't choose how my remitter sends me the money. He decides. I can't tell him that you have to go through my channel, because he will decide, right? So, for example, typically they always ask saying that money will come through a SWIFT because he doesn't want to take any other route, because he doesn't care what I get. The budget is already done, right? So the money is finally going through the SWIFT process, one bank, second bank, third bank, and finally I get some money. So I think the partnership which is now happening is that, let's say, TransferWise actually puts money on both sides. Both sides. So for example, let's say the money comes from, let's say, argument-wise, in my case, let's say from Dubai or Jordan or Copenhagen to India, they would put money in that bank, and they will put money in the bank locally, let's say in India. And the transaction is done locally. So what they can actually commit is that instead of money coming in days, they can actually commit, money can commit in minutes, because it's actually not transferring across the ecosystem. It's coming as a one single transaction locally, which is very, very simple, right? Think about it. The remittance which is right now done is saying transaction by transaction. Why would we do transaction by transaction? Do a net off and figure out, right? It's such a simple thing, but nobody would do it because there's a margin which is getting impacted, right? So that's what these guys are doing right now, but you have to realize that they don't have that much of sort of bulk of money. They can only do a retail transaction right now until they are maybe funded $1 billion, $5 billion as some of them will. So disruption, so collaboration is for sure, but banks can actually transform this business ecosystem totally. But it will not happen because there is no shocker of the market coming in. Shocker will come maybe when Paytm will pull this business dramatically, and some of the critical corridors will go away because they will do it far more efficiently. And I'm just saying Paytm is a classification here, saying that they are the most pro customer ecosystem right now which we have. But somebody else may also do it as well, right? So I think we need somebody to compete heavily on that. Otherwise, as a normal, small-time exporter, it hurts when you look at the money which comes in. And think about it. When I get a loan from the bank, and I take the loan from the bank for, let's say, 6 months, the banks will charge maybe 6%, right? But money will come through banks for just my money, which is coming in, I lose, let's say, 3 to 4%. My money in 1 day or 5 days, I lose that much of money. And at the end of the day, there's also float, because bank is holding that money on their ecosystem. It's not my account, right? 5 days is floating from somewhere to somewhere. I have to anyway tell my importer that, boss, money is, if once you have sent here, I have to figure out and follow up, right? So I think the corridors will only get opened up when somebody will compete. Right now, I think this is one segment bank can enjoy money for some time to go.
Sure. So what I'm hearing from you is it is still time to go. It is still the startup ecosystem needs to have still more space, more money, where we can really compete. Right now, it's more of a complementary to each other. That's what you see as startup space.
And all other counterpoint can be if RBI comes and says that this credit has to happen at this time, and this is the maximum you can charge, the fun will begin then. Right now, there's no really control there. I think everybody assumes that remittance is supposed to be expensive. And imagine in a world where we want to promote exporters. We want to ensure that rates change. Real no support out there. I mean, I feel so bad about myself saying that when I export so much of service, nothing comes back. 4%, 3% will get lost.
Got it. Bishwa, any views from your side?
So I think from the various points of view that we hear, I think the cost per transaction is a concern. I mean, at the end of the day, even banks understand the fact that we compete with each other as well on the cost per transaction, right? So it is not that it's a market cartelized or it is a market where there is a monopoly, right? In fact, the government, because of this structure, is probably promoting that kind of competition so that there is a choice in the market which customers have. Now, if I were to look at how this might shape up, is that banks will typically like to offer customers more on-the-spot kind of visibility in terms of what their FX rates are, what kind of charges are there, and that is again something which can be enabled on the back of typically a blockchain. Exactly what Samir was mentioning, that because in the blockchain money actually does not move, you actually have two ledgers on the two sides of the two ecosystems which debit and credit automatically depending on certain rules. So that principle can still apply here. But in terms of cost per transaction itself, there are some other ways to bring that down. I think automation, and we did speak about use of AI and machine learning for fraud management, other kinds of things like operational work, liquidity management. Some of these operational overheads can be reduced by banks, and that has always been our intent. All the banks are working hard to make sure that their back office processes are automated so that typically a cost per transaction goes down, and that allows us to compete in the market with a more favorable rate with customers. So I think that will be a continuous process of innovation. Yes, I agree that the government could have stepped in and said this is a rate, but then one size doesn't fit all kind of an approach. So that would be my view. So it is possible to optimize cost per transaction. There are efforts going on. There is a big role technology plays in that space. Now, if I look at Swift GPI as an example, now Swift GPI, if you look at now the other side of the spectrum, Swift is completely a network of banks, right? A message flows between 5 or 6 entities. Each entity is charging its own certain amount. And as Samir was saying, by the time it reaches the beneficiary, there is certain charges deducted. There's also a certain time being taken, right? So GPI is really their solution. So they are also recognizing the fact that this is a demand from the market, right? The transparency is required. So what is Swift GPI? It is actually a sort of a centralized database, right? All the banks are going to be sending messages of each and every transaction from their database to GPI, which enables GPI to measure 2 important things. What is the charge that each of the member banks are taking each of the correspondent banks are taking? And secondly, what is the TAT? So I think these are the 2 most important factors from the transparency point of view that the customers are demanding, and we should be able to acknowledge that, right? So there are efforts going on, but there is only one single interoperable system today, which is Swift globally, right? That is very hard to change and uproot, because the realization is that all the countries are not always having the same geopolitical equation. So it's not always easy for a single standard to emerge, globally. It's very, very hard. In fact, I read an article where I think inside of Scandinavia, certain countries have actually formed a small kind of a framework called P27, which is local to their countries. So what is happening is that these kind of partnerships for bilateral trade and all is happening at a regional level. So globally, one standard, is very, very hard to, I don't see that happening, to be honest. In Europe, we have seen SEPA, which is the nearest I can think of, which has been a very big success. Now, I'm saying within Europe, Scandinavia is having its own. So such regional kind of agreements will come into place, which will kind of bring banks together in a common framework. But globally, one framework is very hard to achieve. So in that relation, Swift will continue. So Swift GPI is probably the nearest I can think, which enables us to get to the transparency of this and the cost visibility. So those are some of the ways I think, Sunit, that we can definitely see banking changing and being more responsive to the customer needs.
Got it.
Just to
Yeah.
add to the point, I do agree, but as we see, and let us see how Europe react to PSD2, which is due in another month's time, or by 30th October. They missed the deadline of 18th January this year. And the GDPR. We already have a draft of a GDPR almost on the same lines available in the country itself. I believe as we go forward, more and more countries would start working on what needs to be shared, how needs to be shared. So there is some sense of collaboration would emerge, but I believe it's some time to go forward for that.
And I think I also see a lot of work being done by MasterCard, Visa, all are trying to make sure the entire cross-border payment as a space is being constantly innovated about, and we have latest solutions coming in. So maybe let me ask this last question to all the panelists, and each of them can give a short answer on that. So while we see what's happening now, we also understand how it's different than what used to happen earlier. If I ask you slightly longer term question, what do you think the payment industry, and again cross-border payment industry, will look like maybe in 2030? So let me start reverse order. Bhavesh, what do you think will 2030 look like?
Yeah, so most of us talked about blockchain. I don't want to be in between their lunch and this question. So in my view, it's blockchain, low cost, highly secure, and chances of failure are less.
Sure, Sameer.
I think tech doesn't matter. What matters is the customer impact, right? So I hope by the time I am 60, I'll get maybe a 60 bips and not more than that as a charges. I think that's my hope. And I don't believe in it because I think this is the segment, despite all our attempts, nobody has been able to disrupt, unlike payments, local, unlike lending, right? So I think I just hope it goes below 60 bips.
Sure. Vishwa, from your side?
But then only tech will matter. You can only achieve that through tech, in my opinion.
No, I think it's not a tech issue. It has never been a tech issue. Ask the business heads. They won't want to move an inch because it was always a tech thing. Ask someone saying that you have to reduce a price. He will give me a guidance on how tech is expensive. Unfortunately, I was a CTO in bank multiple times, and I know how it runs. It's not very expensive to run it. It's just that business guys will give you more gyan on how the costs are very, very high. So I think it's not technology, it's the intent.
Sure.
No, very, very valid point from Sameer. I think the intent has to be to become more efficient from a cost and speed point of view both, and we've discussed that a lot. I think customer experience is going to be a big enabler for us, in the 2030, 40, whatever you want to call it. Today, the experience is probably very siloed and not necessarily very conducive to a really, really satisfying and a valuable experience. I also see that, as we discussed, decentralization happening through blockchain. So, I am using the word decentralization here, not centralization, because each of the blockchains essentially gives power to its members to run in a kind of a member state, kind of an architecture. And that will emerge, I think, as pretty strong, which also Bhavesh mentioned. I think IoT may have a role to play because, honestly speaking, customers everywhere are becoming more mobile. They are using different devices. So we've always talked about payment industry cost, but from a usability point of view and how do we make it more convenient for customers, IoT may play a role as well. So it's going to be a plethora of these kind of initiatives that will shape the future. But it is a big business. It's here to stay, and it is a very essential part of the global economy.
Sure. Amit, your lasting comments.
So what we have seen and that most of the banks have started doing a very, concentrated effort to push in or get in AI, ML-based kind of a solutions. So by 2030, what we are looking forward to that most of these remittance or cross-border payments would be sort of automated based on some AI solution, which would start giving a red flag if this can be, taken as not a good transaction. And I believe it's a time, it's a very exciting time for banking industry, but I don't think so that this would happen by 2030. More or less take a year or two, you would start seeing a disruption happening on cross-border remittance.
So I think this gives a good summary to our discussion. I think what we believe as a group, that the transactions are becoming faster, transactions are becoming cheaper, they're definitely running faster than an aircraft at this moment, but what you all want to see maybe by 2030 is they happen in a blink of an eye. That's what I think we all should be aspiring for, and that should be the much more cheaper cost than what is happening now. So I think with less than 2 minutes remaining, we'll take a couple of questions from the audience and then wrap it up. Yep.
I have one question. CCIL has recently launched a retail FX platform, which helps, or its intent is to reduce the cost of transaction for the retail customers. Any feedback so far? It's been, I think, 2 or 3 months since that has been launched. Any feedback from the banks on this, or from the user perspective?
As a user, none.
So has it not taken off yet? Any transactions are happening, not happening?
Usually what happens, when a new system get introduced into a country, there's a gestation period, right? So we are still not that much of a digital savvy customer, wherein State Bank have launched their own whole digital platform called YONO. But whenever such new things come in, it takes almost a quarter to 2 quarters, depending on how users react to it, and then that system got stabilized, which we have seen with example of GST, et cetera, right?
We'll take one more question. Yeah, please.
Hi, this is Abhishek from IDFC. Quick question for the esteemed panel. I'm a big proponent of blockchain myself. From a regulatory and a governance standpoint, what are the challenges the banking leaders see as far as the current situation is concerned? So if you could answer that.
No, regulatory-wise, cross-border payments. If you look at that particular part of the industry, whether you're looking at anti-money laundering or KYC and those kind of validations, they kind of still are the same. Materially, no change in that regard. I think what is going to happen is that each of the local regulations might have an impact. For example, local regulations in a country X might have some impact on the kind of data that is being shared, on the kind of information that they will seek in the event of a particular fraud from another country. So there's bilateral. So some of those compliance aspects need to be kept in mind. But otherwise, the fundamental premise behind any of the financial transactions, the way we do, will still remain, will still hold true. So nothing specifically, I would say, from a compliance point of view that would have come in. But then again, we've seen a kind of a large number of frauds which have happened on the SWIFT platform, right? I mean, that is the reason RBI came out with a lot of regulation. But do you really think that's because of lack of compliance controls? No, it is lack of control. I mean, that control has to be bolstered. That is the responsibility of each and every bank, in my view, right? So RBI is only helping us to make sure that we are more well aware of what is going on. But as a result, one of the things that is definitely happening is that the amount of threat that is existing on financial landscape globally is only increasing. So the kind of possible threats that might happen, the kind of possible frauds that might happen, we need to be vigilant. And probably there, as he was saying, the GDPR is just one step in that direction, or the IDPR as we call it. There may be many more such regulatory frameworks that come in, which kind of protect the customer's data, protect the customer from a possibility of a fraud, right? So those kind of things, I think, will probably happen over time.
So thank you. I hope we could cover a topic to some brief and depth, whatever we could in 1 hour of time. And thanks everyone for being attentive to us. Thank you.